What's going on, everyone? Welcome back to another video. So in this video today, we're going to be going over and talking about a little bit more on the U.S. inventory report for the real estate market, kind of what I'm seeing from this data that was recently shared. And it's very cool data because it kind of shows you what we're seeing year over year. So pretty much from this week versus this week last year. And I just want to kind of go over, share a little bit about my thoughts as to what this data is telling me, and then also what I'm going to be expecting moving forward in 2023. So if you are new to this channel, on this channel, we're going to be going over and talking about a lot of different things relating to the real estate market and real estate investing. So if that is something that interests you, feel free to subscribe to my channel down below. And if you find some value in this video today, I would really appreciate it if you guys can give it a thumbs up. But with all that being said, let's jump into my computer screen right now and share a little bit more about what I'm seeing from this data and what I believe it's telling us. So we're inside of my computer screen right now, and this is from realtor.com. And I'm going to leave this link in the description below so you guys can go and check it out yourself. But if you just go to this link here, it's just realtor.com/research/data, and go down to this link here. It says view US data. And I kind of cleaned it up a little bit just because I wanted to talk about some of these specific bullet points. But that is pretty much how you can see the weekly report that comes out every single week, just kind of recapping what they've been seeing in the market. So some things that I want to point out here, you can see in these different types of columns, you have the week end date, the median listing price, and then the percentage, the active listing count, the new listing count, the median days on market, and then also the price reduced count. So the first one that we're looking at here is the median listing price. So we can see right now that the median listing price currently for the week ending December 3rd is 10.3%. So what that is telling me is that obviously the listing price for homes on the market right now is going is at 10.3%. So it is slowly going down. And if you can look back at the previous weeks, ever since October, the week ending on October 8th, it was 13.3%, and you can see that it's been going down very slightly week over week ever since October 8th, except last week, it kind of had a slight increase at 12.2%. So out of the last 8 weeks, 7 of them have been going down. So I think that's what's telling me is homeowners are starting to realize that their houses aren't selling as quick as they might want them to. And in order for them to sell it, they're going to have to list it at a price that's reasonable for these buyers on the market. Because obviously with the mortgage rates going up, it's harder for these buyers to afford the homes that maybe they could have afforded a year prior. So right now, housing prices are going down, which is telling us that maybe these homeowners are starting to realize a little bit that in order for them to sell their house, they're going to have to reduce the price a little bit as well. But in the flip side, we can see the active listing count year over year right now is at a whopping 52.8%. So if you just go back to like this same time last year in December, you can see that it was at negative 29.4%. So that just tells you that houses were flying off the market back this same time last year. But now we're at around 52.8%. So pretty much houses are staying on the market for a lot longer of a time period. And even if you just kind of go back for the beginning of this year, back in January, you're at negative 29%, and it's slowly been going up and up and up and up. And really right now we're at 52.8%. So every single week, houses are staying on the market for longer. So if that doesn't tell you that, maybe these people that are listing their homes are just not reasonable, or buyers just can't simply afford to put offers on houses, and maybe they're kind of starting to move forward with renting instead of buying. This is a great data point that is showing us that houses are staying on the market. They're not really being sold as quick as you might expect. And also, the new listing count right now is negative 7.9%. So this was kind of an outlier because if you look back really since the beginning of October, we were sitting at around negative 17.2% of new listings coming on the market. So over the last couple of weeks, this number has been in the negatives, in the double digits, negative 17, negative 14, negative 15, negative 12, 13, 19, 17, 16, 17, and now we're at 7%. So I'm not really too sure exactly why this is such an outlier. I think maybe one of the reasons is because we're kind of coming to the end of the year in December, and just seasonally, this is maybe some of these homeowners want to try to sell their house before the year ends. So new listings for last week have gone up slightly. And something to kind of point out here as well is that if this number does go into the positives, that's only going to hurt this active listing count, because obviously with the more listings that kind of continue to come on the market week over week, with the current rates and everything that we're seeing from this data, this active listing can continue to go up. And when you have more houses on the market, it's simple supply and demand, right? If there's more supply, the demand is probably going to go down a little bit, because there's a lot more options for these buyers to purchase a property. So in return, that's going to cause the housing prices to decrease as well. And then this data point here, it talks about the median days on market by day, year over year. So right now we're at around 9 days on the market. And if you just look back really to the earlier this year, we were in the negative. So that just tells you that houses were flying off the market very quickly. I mean, there was times where you can list a property and you would get multiple offers, that first day that the property was listed. And right now we're just not seeing that anymore. And really in the last, couple of weeks, this is the highest it's ever been for 9 days on the market compared to the weeks prior. So that just tells you that houses are sitting a little bit longer than expected. And then finally, the price reduced count year over year. Right now, we're at a whopping 120%. And that just tells you that these homeowners with these houses staying on the market for longer and longer and longer, they're starting to begin to reduce their prices to a price that might be more reasonable for a buyer looking to come in. So right now we're at 120%, and this is the highest that we've seen all year to date for 2022. You can see that it was slowly kind of going up over the last couple of weeks. We started, even if you just look back towards the beginning of October, again, October 1st, 2022, we were at 68.3%. And every single week from there, it's been going up slightly more and more and more. And right now we're sitting at around 120%. So homeowners are starting to lower their prices. So that just kind of is some data for this weekly report. I want to start making these videos just kind of recapping what I've been seeing from these reports from the previous week, just so we can kind of stay on top of this real estate market for the US. But another thing that I wanted to share with you all is that if you just go over to this article, I thought this was pretty interesting. It talks about how the federal funds rate is still climbing. And I just want to read a little bit of this paragraph here just to give you some perspective. So it says, if you have to sell your house, you should do it now, says Armstead Jones, strategic real estate advisor for Real Estate Beast. Mortgage rates aren't going down and actually may go up. Something important to remember is once you sell your house, then you have to find a house to buy. The Fed has signaled that rate hikes will continue even if they won't be as steep, and mortgage rates tend to follow the federal funds rate. The good news is home values skyrocketed over the course of the pandemic, so selling now is likely a wise financial decision. Despite prices coming off their June peak, most homeowners stand to make large profits if they sell their home, even in today's market. So this article just kind of tells you, if you are looking to sell your home in the next couple of years, it doesn't hurt to still list your home on the market today. So houses are still being listed on the market. There's still transactions being done. And I think this is really important because a lot of these sellers, they're scared to kind of list their property on the market because they want to just hold off and see what happens. But realistically, if they want to sell their house in the next couple of years, now is not a bad time to sell, because even though the interest rates are a lot higher than they were a year prior, you need to realize that a year prior, the interest rates that were going on in the market were just ridiculous. And it's not something that, you see very, very often. So when you see this slight increase in mortgage rates, that is kind of telling you that it doesn't really matter. Like, you could still list your house right now. You can still sell your house, and there are still buyers in this market, even though that the rates have gone up slightly. And the last thing that I want to leave you guys with is just some of the top housing markets for 2022. I don't know which markets you guys are watching this video are in, but this just kind of gives you an idea that the housing market's position for growth in the next year are kind of these smaller types of markets. They're not like these large markets that you might see in California or Florida or things of that nature. You can see that Hartford, Connecticut has potential for growth of 6.5%, El Paso, Texas, 8.9%. And you can kind of just see this entire list of all these different types of cities and just kind of the general city how they're all somewhat similar cities. They're kind of smaller markets, and that's what Realtor.com predicts to see the most growth moving forward in 2023. So that is just a quick update on kind of the overall market that I've been seeing, just based on some of the data, and also what Realtor.com is expecting to see for growth in 2023. If you guys did enjoy this video and you liked kind of this report and kind of this overall style of this video, make sure to leave your comment in the comment section below. I would love to kind of continue to recap you on these videos week over week. And if you did enjoy this video, of course, I would really appreciate if you guys can give it a thumbs up. It really helps me, helps the channel grow as well. So that's all I have for you in this video today, and I look forward to seeing you all in the next one. Take it easy.